Have you ever looked at your bank account and felt relieved because you had a healthy amount of cash sitting there? It feels safe. It feels responsible. After all, we've always been told that saving money is the smart thing to do. But what if that same habit is quietly making you poorer every single year? The truth is, cash is an incredible tool, but it's a terrible place to build long-term wealth. I'm John, and today we're going to explore one of the biggest financial traps that millions of people fall into without realizing it: keeping too much money in the bank. Let's start with something that surprises a lot of people. Imagine you have $10,000 sitting in a savings account. You don't touch it for 5 years. At first glance, nothing seems wrong. Your balance is still there. You didn't lose any money. But here's the problem. If the prices of groceries, housing, transportation, healthcare, and everyday necessities keep rising, that same $10,000 buys less than it used to. Your balance hasn't changed, but your purchasing power has. It's like owning an ice cube. From a distance, it looks exactly the same, but minute by minute, it's slowly melting. This is the hidden cost of holding too much cash. Many people confuse saving with investing. Saving is designed for stability. Investing is designed for growth. They solve completely different problems. Savings protect you from emergencies. Investments help you build wealth over time. When people mix these two goals together, they often end up with far more cash than they actually need. Now, don't misunderstand this. Having an emergency fund is one of the smartest financial decisions you can make. Unexpected expenses happen, cars break down, medical bills appear, jobs can disappear overnight. Cash gives you flexibility. Cash gives you peace of mind. But once that emergency cushion is in place, every extra dollar sitting idle starts facing a different challenge: time. Time changes everything in finance. Imagine two people. Sarah keeps every spare dollar in her bank account because she doesn't want to take any risk. David keeps his emergency fund in cash, but gradually invests the rest into diversified long-term assets. 5 years pass, 10 years pass, 20 years pass. Neither person became rich overnight, but something powerful happened. David allowed time to work for him. Sarah only allowed time to reduce the value of her money. That's one of the biggest psychological differences between savers and investors. Savers focus on avoiding losses. Investors focus on creating future value. Neither mindset is completely right or wrong. The goal is balance. Another reason people hold too much cash is uncertainty. Economic headlines can be scary. Markets go up, markets go down. Every week there's another prediction about recessions, inflation, or financial crises. When people feel uncertain, they naturally move towards safety. Unfortunately, feeling safe and becoming wealthier aren't always the same thing. Sometimes the safest emotional decision becomes the most expensive financial decision. That's because inflation doesn't stop while you're waiting for certainty. It keeps moving. This doesn't mean you should invest every dollar you own. Far from it. Cash has important jobs. It pays your monthly bills. It covers emergencies. It gives you freedom during unexpected life events. But money that has no purpose for years shouldn't necessarily stay parked in the same place forever. One helpful way to think about your money is to give every dollar a job. Some dollars are emergency workers. Some are bill-paying workers. Some are vacation workers. And some should become long-term wealth builders. When every dollar has a purpose, your financial decisions become much clearer. Building wealth isn't about making perfect predictions. It's about consistently putting your money where it has the best chance to achieve the goal you've assigned to it. That's why many financially successful people don't ask, "Where is my money?" They ask, "What is my money doing? Is it protecting me? Is it growing? Or is it simply sitting still?" Those questions can completely change how you think about money. Remember, the goal isn't to avoid cash. The goal is to avoid unnecessary idle cash. Your emergency fund deserves safety. Your short-term spending money deserves accessibility. But your long-term goals deserve the opportunity to grow. Because every year your money spends doing nothing is a year it isn't working for your future. Small decisions repeated over many years create surprisingly large results. So, the next time you check your bank balance, don't just ask how much money you have. Ask whether each dollar is doing the job it was meant to do. That simple shift in thinking can become one of the most valuable financial habits you ever develop. Thanks for watching Just Invest. If you enjoy the video, make sure you like, share, comment, and subscribe. I'll see you in the next video.